strategy roundtable discussion where we talk about current market conditions, current pullback, why it's happening, what to expect to the end of the year and beyond, and how to take advantage of Yellow Tunnel subscription to help you trade and navigate current market volatility. I'm going to spend maybe half an hour on the content and then answer any questions you might have, so stick around, and then we'll go over the special bonus that we have right now. For those of you who are new, welcome. If this is your first live event, do me a favor, tap in first. Very deep welcome. My background, Tony, welcome. Not sure if this is your first or not, but my background is in technology. So I was a CTO and executive in several fintech startups here in Chicago, working in broker dealers, hedge funds, since the Options Express was one of the first startups that I worked for, and they went public in 06, 07. And since they went public, I kind of decided to manage my own money using the technology and using the knowledge that I've acquired. And I've been doing that for over 12 years now. Started at Tradespoon, started Yellow Tunnel. In the past 2 years, Keith Harwood, who joined us from Options Hotline, his background is market making in, I think, SPX here in Chicago, and he worked with several hedge funds. So he brings a lot of knowledge on options trading. He does one-on-one coaching program here as well to help you navigate current market volatility and build custom trading plan. So between two of us, we have over 25 years. I have 20 years of experience. He has 20 years of experience. So it's about 40, 50 years worth of experience on technology side and managing my own portfolio versus, and also professional trader who brings his perspective. So this is, I think, is a great value from Yellow Tunnel that you can get. We have live trading room every day, the morning first hour of trading session. Last hour of trading session, we answer any questions you might have. So I hope you can take advantage of that offer. Disclosures are very important. I'm going to go through current trades. Some of them are live trades that I have today. So it's very important to look at the disclosures. If this is your first live event and you haven't seen these disclosures, I encourage you to visit optionscreening.com on your link to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, trading psychology is important. And before we jump into trading psychology, let's talk about current market conditions, right? So if you look at the, actually I have VTV, this is equal weighted S&P from Vanguard. You can see we're almost at all-time high. We retested October lows to the penny, and since Friday, since the Fed speaker, some of the Fed speakers basically voiced an opinion that December is not off the table, and potentially there is a rate cut in December. We had inflation data that's better than expected today, and you can see VIX dropped below 20. S&P is turning positive, and value stocks are not that far from all-time high. If you look at the equal weighted S&P, same idea, right? Equal weighted S&P is above 50-day moving average. We'll see where we're going to close today. And QQQ right at the 50-day moving average, testing this downtrend since the end of October. If you look at the small caps, we're also trading above 50-day moving average today. Very strong rebound since Thursday. We're kind of above average volume reversal and trading above the 50-day moving average. If you look at the 10-year yield, right? If you look at the 10-year yield, it continues to drop. It dropped below 4% on better than expected PPI data, inflation data today, indicating that potentially December rate cut. And we are retesting October lows. Right? We are retesting October lows. You can see it in 10-year yield. You can see it in 2-year yield. It's dropping, but it's not making new signal, right? And I would watch kind of the rate of acceleration of the interest rates drop. You know, if it's stable and trades in the range slightly lower, I mean, that's good for the market. The only way it would be bad for the market if you have a sharp, 4 or 5% drop in, 2-year yield, 10-year yield in short period of time, right? Because of the fear of recession. You don't see this today in the small cap action and QQQ action, or equal S&P. So I think for now the path of least resistance is to continue stabilize. So for now rates are stable, no new signal, trading in a well-defined range, but 10-year did drop below 4%. We were as low as 394 in October and maybe 385 in April. So dollar is stable, also right below 100 level, pulling back today. And you have, we talked about equal weighted S&P, QQQ, grinding right at the 50-day moving average, semiconductor slightly lower. So if you look at our model, so let's look at the aggressive power trader. This is the model that runs every single day and provides signals in the market. So we have Merck. Merck continues to trade higher, very strong uptrend. The signal is posted every day right before market opens. Right, so each day at 8 p.m. and 8:30 a.m. this morning. So last night it was posted at 8 p.m. TJX and others, very strong price action in some of the retail stocks and healthcare, right? Whether it's TMO or Merck, you have a strong uptrend. In terms of spiders, you see the model predicted for the next 10 days, we could be as low as 650. So it does see that potentially market is getting to the overbought levels, and nothing has really changed. The only thing that changed were the odds of rate cut. There were 40% on Thursday, and now they're 70–80% today after the inflation data. But that doesn't mean that math will not change once we have more economic data. We had a government shutdown, and we're still not sure about unemployment rate in October and November. We're not going to have that data in the next 2 weeks, right? That uncertainty still persists. So, until the unemployment data, you could still revisit recent lows around 650, 655. That's what the model says. But going into next year, model does see potentially getting to that 700 level, all-time high and beyond. So short term, there still could be pressure in the market. Long term, I think the bull trend is intact and we continue to grind higher. So that's what aggressive power trader says. If you look at the positioning data on SPX, we talked about this. So let's look at the beyond. Well, let's look at December, end of the year, right? We have end of the year in January. So currently, gamma flip point is 6670, the put wall is 6700, and we're trading above that 6750. We are retesting, right? On SPX, we are retesting, I think, Thursday's high, right? Thursday, when we have I think unemployment data, right? We had unemployment data, and then we had NVIDIA earnings. So NVIDIA earnings were better than expected. Unemployment for September ticked up slightly higher than expected, right? 4.5%. Initial reaction was 6750. And then an hour later or 2 hours later, market sold off on that fear that unemployment rate is going to be higher than expected, especially if it was higher than expected in September. Then October, November, it could potentially have another leg up. So we're basically retesting that high. So that's where we are on SPX. But we're trading above the 6700, the put wall. And these concepts, gamma and put wall, they might not be, if you're not an option trader, maybe you don't need to understand what a put wall or gamma flip point. But if you're a stock trader and you don't trade options, you still need to understand these concepts, because these are derivatives and of options. They're very highly, they're very liquid. There are billions of dollars worth of positioning in December, right? Or $120 billion of positioning in December. And they're providing support and they're providing resistance. Right? They could be act as the repellents or they can act as a magnet. So 6,700, we talked about it for the past few weeks or even few months. This has highest position of calls and puts, right? And so 6,700, we're above that level. That means this is a support, right? So, and I would say support, I would say resist. Until now, it still resists support number one. I mean, it is support number one, right? Because we are trading at 6,750. But when we trade below 6,700, it was the resistance. So we need to see if market can hold on to these gains today, not roll over toward the second session, and see if we can stage another leg up to 6,800. Right, that's your next resistance. Not a lot of positioning in 6,800. Right, resistance number one. And then you do have large positioning, probably highest call positioning at the 7,000 level, with the model basically calling. So resistance number one, 6,800. Resistance number two is the 7,000 level, and support is 6,700 was the support today. If we don't hold this level, then you have support number two at 6,600, and support number three at 6,500. So these are different levels of support. And then let's look at the expiration. Let's see how people are positioned into December. This is where a majority of the contracts are. So December expiration. Look at January, December, January. So you have different scenarios, right? Value stocks, equal weighted S&P already rebounded and continue to push higher. Right, so we're not that far away from all-time high on equal weighted S&P. As QQQ is lagging because of the evaluations, and people are concerned about the evaluations. And then you have scenario number one, right? So scenario number one, we are retesting based on the supply and demand of option contracts for December, right? If unemployment is under control, right, and still AI is here and companies invest into AI and productivity is increasing, then scenario number one, we're getting to the all-time high, maybe 6,900, 71, somewhere between 6,900 and 7,100 by end of December, third week of January. Scenario number two, no, we're still stuck in this range, especially if unemployment, September was higher than expected. When November unemployment arrives, second week of December, we could, if that ticks up, then you could be trading in this range, right? Scenario number two. And then scenario number three. Scenario number three, if unemployment is higher than expected, maybe 4.7, 4.8 unemployment rate, maybe other signs of recession, right? Construction activity is down, default on credit cards is up. So there are more and more signs that showing that the economy is cooling and the evaluations are very high. We've seen price action of Nvidia today down, in the morning was 7%. Broadcom, not Broadcom, but Micron was down 6-7%. So you could have the scenario number three, right? So those are the three scenarios going to the end of December and into January, early January. So how many of you say, Vlad, Tom Lee on CNBC said we're going to make new all-time high by end of the year or early January? So scenario number one, right? This was Tom Lee. Scenario number two, no, there's still signs that the economy is cooling and evaluations are very high for QQQ. You can see QQQ is underperforming today. QQQ is underperforming today, and there's so much can JP Morgan and Caterpillar, they're already getting into these overbought levels, right? And $1 trillion companies like Nvidia, Microsoft, Meta, they're still underperforming, right? And without Nvidia, Meta, and Microsoft, you're not going to get too far in the market, right? And then scenario three. So how many of you does, all right, Gurdeep, does open interest include sold and bought options only sold? So open interest includes all the options, right? If you open in a short position or a long. So if you're doing buying to open or sell to open, that contributes to the open interest, right? So these bars are very high level of all the open positions. It could be long, it could be short, right? This could be a long put or it could be a short put, right? But it's it's the sum of all, right? But if somebody's closing, then open interest or expiring, then open interest drops. But this is, yeah, all of the positioning for all of the, you know, in SPX, and you can search for other symbols, but this is the most liquid name. All right, so how many, thank you, Gurdeep. So how many of you say 1, all-time high? No, 2, we're still stuck in the range, and 3, right, 1, 2, or 3. Gurdeep, what do you think? End of the year, beginning of September. You think Tom Lee is right? We're going to all-time high? And some of the other analysts out there. Edward, welcome back. Hovik, welcome. Phil, Tony. Anyone? You guys not sure? All right. I'm going to go with 2. I think we're probably not, especially with equal weighted S&P at so highs. The only way we would see 3, if unemployment data, that second week of December, when unemployment data comes in, it is beyond what people expect, right? If right now people expect maybe 6.5, 6.4, I mean 4.6, 4.5. If it comes in 4.8 unemployment data, you will see, you know, 6,300 or even lower, right? Outside of that, you know, inflation continues to cool off. It looks like Fed is lowering interest rates, maybe not at the pace that everybody wants, but interest rates are going in the right direction. And Tom Lee is right. There is a lot of investment into AI. AI will increase productivity, and I think next year is going to be again positive returns for the year. Any questions? Why are these exercises are important? Again, you want to concentrate on things that are within your control. The reason I started trading yellow tunnel because trading psychology is very important, right? Trading psychology is very important. You don't know what's going to happen to unemployment. There's a lot of signs that companies are, you know, Verizon just announced that they're letting go of people, you know, Microsoft announced, Meta. You see a lot of, you know, Google. You see a lot of companies, you know, living in this age of efficiencies. You know, people are still increased productivity. They still debate whether AI is contributing to rising unemployment or not. I think eventually it will, maybe not this month, but, you know, in the near future, because the companies are getting more efficient and they don't need as many programmers or as many, you know, copywriters as they did before to create the same, you know, achieve the same productivity. So since you don't know when it's going to happen, the economy of control basically says concentrate on things that are within your control. What's within your control is risk management, right? Number of positions we have and position size. So position size is the most important skill you will need to acquire as a trader to be successful as a trader. To be consistent, right? Mechanical, it's always the same size. It's not like you're risking $1,000 today and $10,000 tomorrow. It's always the same risk. You never lose different amounts of money, right? And your gains are the same thing. And you do this by positive and negative visualization, right? Because we are stuck in between kind of two forces, right? On one hand, right, you look at the chart of SPX, right, or equal weighted S&P, and you know we're grinding higher, right? We're grinding higher. You know, you have a fear of missing out, right? That Tom Lee is right, and we're gonna break through all-time highs. And you know, you know, train is moving and you're not on the train, right? So you have a fear of missing out. The other force that's pushing you down, right, is the fear of future regret, right? Nobody can guarantee you, no Tom Lee or nobody else, fear of future regret, right? And these are terms that you can hear from trading, from clinical psychologists, trader psychologists. Any jobs that require a certain level of uncertainty, right? Doctors, lawyers, you do have these two forces that pull you in different direction, right? That we're not going to hold October lows. So then how do you find the balance? You find the balance. My answer is to go through these positive and negative rehearsal exercises, right? You know, if I'm bullish, what happens if the scenario 3 occurs? If I'm bearish, and I said 3, what happens if scenario number 1 occurs, right? You want to kind of close your eyes and look at the September, you know, January, and just see how do I feel if we are here, right? how do I feel if we are here, right? Like, look at the Bitcoin, right? Bitcoin, everybody said this year, including Tom Lee. Tom Lee said last year, Bitcoin is going to be at 200,000 by end of the year. Well, Bitcoin is lower than it was, in the beginning of the year, right? So negative returns on Bitcoin. So nobody knows for sure, right? And you have to expect both outcomes, right? So that's how I would approach market, right? Nobody can guarantee you that we're not going to revisit 200-day moving average on SPX. Nobody can guarantee you that we're not going to break through all-time highs. A lot of it will depend on macroeconomic data at this point because government was shut down and there's still uncertainty about where the the state of the economy and state of employment, right? And it's a dual mandate for the Fed is not only worry about inflation but also worry about recession and unemployment, and they've repeatedly expressed that they're more concerned about recession and unemployment than they are about the inflation data. Any questions? So this is very important. How do we help on yellow tunnel? So we have different models, right? We deliver models and AI. You can talk to our chat. This is all MLM AI model that can trains on how Vlad answers questions, how customer service asks questions, and be able to answer majority of your questions. And if it cannot, it will route you to a human to open up a support ticket or schedule a phone consultation. So you do have these bots, right, that are trained on customer service data. Same thing with these models, right? Aggressive power trader, weekly power trader, these earnings power trader. These are the models that the data that the models are trained on for neural networks and latest advances in AI, and provides you predictions for where the prices are going. So you can see this is an example of daily, Merck model identified Merck this morning, and you can see Merck is in strong uptrend, right? It's trading, continues to grade higher. Second one was TJX. You can see TJX. Also a very strong performance, outperforming the sector, outperforming industry groups, and TMO. So I would give an A to a model. It's doing a great job showing you which stocks or sectors are in uptrend. So this is an aggressive model, right? Because it runs every day. It's geared toward short-term aggressive. Either you're a day trader, you hold in position for a couple hours, or you're, just a short-term trader. You might carry your position overnight. But the idea is that the signal is for, couple hours, couple days, right? That's what the signal means, right? If tomorrow there's unemployment data and it's, not very good, then, obviously these stocks will pull back with the rest of the market. But the intent is, couple hours, couple days, same idea. You only have 4 active positions at a time and no more than 2.5% exposure per position. Right, so that's aggressive power trader. You can look at the history of all the signals, right? Vlad, what was the signal yesterday, right? Okay, then you can go in and see, okay, Gilead was the signal. And then you can actually see, do you trade any of these signals? So if you look at our pay program, then actually, we did trade in the pay program, we traded ALB and Gilead, right? These are the signals from both active trader and weekly power trader, right? So weekly power trader, you have ALB, you have Gilead, you have some of the insurance name, Medtronic. This is all where the signals came from. And again, this data, the weekly power trader, unlike aggressive power trader, it gets updated each Sunday, right? So every week on Sunday, Keith and I look at these signals and we trade them, right? We trade them. So that's the weekly power trader. Again, you can look at look at the history of these signals. You can look at the recordings, right? Keith and I, we manage live trading rooms, so you can go into a trading room and watch the recordings, right? Every day there is a recording, and you can also have a library of different roundtable recordings where we talk about current market conditions. Active investor workshop, if you want to learn about options or stock, we talked about volatility skew, we talked about technical analysis, fundamental analysis. You can, anything, you can, I want to learn about call, type in call, and it will give you webinars on calls, right, that you can also, explore. So a lot of educational content on the recordings, history. AI analysis, right? A lot of people ask me, what do you think about NVIDIA? How low can it, can it drop? It could show you the next 10 days, it sees 164, but at least as of right now, long-term trend is still intact, right? And potentially could get to all-time high, right? So we do give you signals, right? We do say that short-term we could get lower, right? Maybe to 200, close to 200-day moving average, but long-term, the uptrend is intact, and there is plenty of business for both NVIDIA and Google and and Broadcom. So that's the analysis, right? Next 10 days, there's still downward pressure, but a month or 2 months from now, eventually NVIDIA will break through the 200 level, which it almost did right at during the earnings. Any questions? Edward, Deep, Hovik, Phil, Tony. Okay. So AI analysis, you can put any symbols, right, whether I trade them or not. Tomorrow, Deere announcing earnings. Okay, how does the model view Deere? In the next 10 days, it's already overbought. It's at 500, and long term, it sees that Deere is actually in downtrend, right? So you can use these tools to help you manage your own positions and portfolio. Now, dynamic power trader is actually where I trade stock and option symbols. So if I have position in Caterpillar, JetQ, I have a position in Spiders, not Spiders, this is just general ETF, but ExxonMobil. So you can actually see all of my positions, right? And you can see all of the orders, right? I'm hedging, bought a QQQ put spread here, right? So I'm hedging my portfolio because I still think there is a downward pressure, but I have most of my positions are bullish, right? So kind of a market neutral portfolio right now. And you can see all of the orders, positions, some of them options, some of them are stocks like Caterpillar and JetQ. You can enter your phone and you will get an SMS message every time I trade. And again, you have a history of portfolio, recordings, and AI analysis. Earnings power trader is the next one. This is more aggressive, where I take advantage using the models of earnings event, right? So we have Deere, Dell, Alibaba, and today I actually traded Alibaba, right? So I sold the put spread, 151.49 put spread, was able to collect 20 cents. Sometimes I sell put spreads, sometimes I sell iron condors, sometimes I'm looking for these sometimes outsized returns. I did not buy call spreads or sold the put spreads for Alibaba because I was concerned that it's going too far too fast. But it was a very bullish position, right? A lot of call buying in Alibaba. They missed earnings, so obviously you have a negative reaction. But in previous example like Cisco or NVIDIA, actually NVIDIA last week, I sold put spread and call spread. Sometimes I buy call spreads. But the idea is to find these returns where you get 50% return overnight, 200% return overnight by trading options and taking advantage of elevated volatility during earnings. And then profit accelerator is stocks. Some people don't trade options, so they just want to see stock ideas. So that's profit accelerator, and paid program is also aggressive short-term trading that Keith manages. You can always ask Keith about the paid program. Any questions on yellow tunnel services? Edward, Gardip, Hovik, Phil, Tony. All right, so in terms of current market, let's look at some of the sectors this week. It's a short week, right? Thanksgiving. Again, happy Thanksgiving if I don't talk to you. I'm very thankful and happy and honored that you guys take time out of your schedule to come and listen to me. So I'm very helpful and grateful, and hopefully you guys will be here next Tuesday and Tuesday after that. or in the live trading room. So you can see retail sector has a strong rebound, right? After this pullback today, up 4%. Metals and miners, finding the footing after being oversold. You see oil companies, consumer discretionary, right? Strong rebound in consumer discretionary, healthcare. So healthcare continues to lead the market. So you have a mixed signals, right? But this week, consumer discretionary stage in rebound, healthcare stage in rebound, utilities kind of building the bottom, not going anywhere. Consumer staples are trying to stage rebound. We have rally in industrial names. We have rally in financial names today. So positive, kind of trading higher than the previous week. Home builders. So home builders are rebounding. REITs, QQQ, right, is trying to reclaim 50-day moving average. So basically cover all of the losses from last week. And transportation is up. Small caps continue to rally above. NVIDIA is still kind of trading low, but this is more of a just competition with Google, and you can see Google and NVIDIA going kind of in opposite directions. And so is Broadcom. All right, any other questions? All right, there are no other questions. Again, happy Thanksgiving. Thursday is day off, Friday half a day, so it's going to be a short week, and then December, and then people are going to start thinking about unemployment data, right? There's not much data. There's some macroeconomic data, but I think everybody's going to keep an eye on the unemployment data and then Fed decision about the December rate cut. Right? That's all I have for today. Thank you very much, and have a great day. And try out any of these services. Right? You can go to pricing page, try out any of these services. We do give 30-day money back guarantee. So try out any of the services I covered today. You can find more information on their dashboard, right, where I discuss each of these services. So you can kind of go through this, exactly what you're getting. Also in the dashboard, we have getting started guide. Schedule one-on-one consultation with Keith, right? If you're looking for one-on-one coaching or somebody to guide you, build your custom plan, bounce ideas around, then we do have one-on-one coaching with Keith. Just schedule a time convenient for you, and he'll be more than happy to give you his evaluations. That's all I have for today. Thank you very much, and have a great day.